part of what I always want to share here are the tools that are the foundation for what I do day in and day out. And that means that we're talking about scanning through multiple time frames. We're talking about making sure we understand the rhythm of the trading day, making sure that we've gone to the economic calendar and understood what the potential volatility of the day could be, making sure that we understand if a particular pair is trading in close proximity to a psychological level. Those are always going to be support and resistance levels to respect, the double zeros especially. So, those are some of the broader strokes. Now, in terms of the way that I like to start my day, again, I hope you're starting off with an economic calendar. Pick whichever is your favorite. And make sure that's part of your everyday routine, because I still find a lot of traders overlook not only looking at today, but looking at the week in general. Okay? The other aspect of your trading that I would highly recommend that if you've never done it, this is not something you need to do every day, but it's something that I think will help you a great deal regardless of the time frame you trade. And I've got it running on my charts here. Okay, you notice this is the MT4 platform, and one of the plugins that I have running is the price movement ranges. It overlaps right on top of my chart. So if I want to take a look at, for example, the Euro US dollar, I can head on over there and I'll start with that daily look. The daily look's going to give me an idea about what? We talk about directional bias here a lot. In other words, is there a prevailing bullish or bearish trend? Not just sentiment and momentum. I can determine that from the grab candles, the last handful of grab candles that are plotted. We can see here that with the exception of this neutral candle here, for the most part, our sessions just over the past week have been dominated by red grab candles, more bearish sentiment and momentum. We don't have a really clear trend, I don't think, as of yet. We haven't been able to spend any kind of meaningful time below this recent low here. And that was, let's see, 40.12? No, it's going to be lower than that. 39.69. Okay, I can go ahead and mark that if I want. So remember where it is at prices we're able to rally from before, 39.69. And keep that right in my view. We pierced it, but we weren't able to establish any kind of selling resistance below it. Notice that? So if I want to go intraday, now that I've got this broader view of this chart, I want to go intraday and start looking at the directional bias, the price movement, ranges. I can do so, and here they are. Now, let me zoom in a little bit and show you what this is, because it's very cool information, because some of you might already be familiar with it from a separate view. And let me go ahead and show you that view here. So I'm logging into the web-based, a standalone auto chartist platform, and I know I've shared the pip movement ranges from this site before. I just want to show you how I'm overlaying the price movement analysis on my MT4, the price movement analysis that we typically look at on the standalone here. So let's say I head on over to Euro US dollar. Click on that. Of course, my emerging and completed chart pattern lists are going to populate, so I can see the different chart patterns. By the way, for those of you that are into Fibonacci patterns, AutoChartist scans for those as well. And you can overlay the chart patterns, you can overlay Fibonacci patterns, and the price movement ranges on your MT4 now. There are custom indicators now available for that. By the way, for those of you that are new to Fibonacci patterns, there are resources available over at autochartist.com. under the trader community, because I know a lot of you may not be familiar with the different Fibonacci-based patterns. And for those of you that are interested, one of my favorite books to teach about Fibonacci patterns is written by Larry Pesavento. That's kind of where my knowledge comes from. There's a book, I believe it's printed by Traders Press, called, I believe it's called Fibonacci. There we go, Fibonacci Ratios with Pattern Recognition. And the book's title tells you exactly what it's about. So any one of you out there want to take that next step into learning more about Fibonacci patterns, you can check that book out. It's a great resource. Not to mention, like I said, we've got resources about Fibonacci patterns right here at the autochartist.com website. Let me give you that link as well, because I know a lot of people have asked me, Raghee, I see that the Fibonacci patterns are available. I don't know enough about ABCDs and three-point retracements and three-point extensions and so forth, three-point drives, and there's a number of articles written here about that in particular. And again, if you want to take that next step into learning more, check out Fibonacci Ratios with Pattern Recognition by Larry Pesavento. That's just my preference. That's just, it's just something that I like. It's a very to-the-point book, lots of charts to show you the examples. That's where my information about the topic has come from. So, going back to the view analysis and understanding the price movement range. So again, you guys are used to seeing this view here, okay? The one where the pop-up window arises. We can look at the price forecast range. We can look at the movement per hour. Now the movement per hour, you still have to check out from the standalone platform, but the movement per hour is not something you need to look at necessarily every day. I think for the most part, you look at that for a couple weeks, you get an idea about the rhythm of the market, when the volatility increases, decreases, the typical price movement range. I don't think that's necessarily something that's difficult to kind of not memorize, but really just get used to, and therefore it's not something that you need to keep going back to, unless you want to, of course. But the expected price ranges change every 15 minutes. They're updated by AutoChartist every 15 minutes. Now, I don't know about you, but as much as I keep this platform open all the time, it is very helpful to be able to go back to my charts and just have that information overlaid. So that's what you're seeing here along the right side. That information populated right on my chart. Now, this in fact does become another way of identifying support and resistance based upon the current volatility, based upon the time of day, and they're just price range forecasts. Okay, so they're suggestions, they're ideas as to where prices may exhaust in terms of resistance weighting and support. So that's why you'll see over the next 1440 minutes, that's the next day, you can see that they're plotted. You'll see a 1440 on both sides of the price action. And the reason for that, of course, is because we have the high part of the range and the low part of the range. And then you have the 240, you have the 60, the 30, and the 15. So that's why you have two lines for each. It gives you the range expectation depending upon how far out your time frame outlook is. Okay, so here's the 30-minute chart. Again, it's just another layer of analysis to take a look at the expectations for where prices might move down to, and therefore which support and resistance might be in play when it comes to, say, psychological levels or even your chart patterns. Now you'll notice on the right side of my chart, I've got some chart patterns going here. Now, if you checked out one of my recent updates over at forexstreet.net, you'll know that I was talking about the consolidation that we were seeing, and AutoChartist had identified a triangle pattern. I don't know how many of you saw that update, but there was a triangle pattern that had emerged, a large triangle pattern, and the initial trend was fairly flat, and I was waiting for a breakout or breakdown. Now, when I took a look at the daily chart, you know that from a momentum standpoint and a sentiment standpoint, there's a little bit more bearishness in terms of what we're dealing with, okay, on this chart. And of course, there are a series of chart patterns and lines and levels that have been in play here as well. But my focus was the 30-minute. I know the directional bias is leaning towards the bearishness a little bit more. So let me show you that update. So here's the update, and this is what the chart looked like before. Blow this up for y'all a little bit. Okay, so that was the alert. Prices have consolidated. Notice that I've got an absolutely flat, non-existent initial trend here. What is that indicating to me? Remember, 1 to 3 bars typically is going to give you an idea that the volatility has just dropped and prices are trading in a narrow range. I can also see by the drop in I can also see the drop in volatility by the number of blue candles. Look at those. Look at that steady stream of blue candles. Neutral blue grab candles. I've got a flattening 34 EMA wave. I've got 0 initial trend bars. So everything here is telling me that prices are becoming a coiled spring. Everything here is indicating that I'm dealing with a potential momentum environment, which means I'm going to be waiting on a breakout or breakdown. Now, what essentially happened? This is where that update, by the way, basically left off, where that red line is. So that basically shows you where that triangle pattern had formed and where I had captured that image for that update. And then you can see what's happened subsequently. We went from the blue grab candles to, we started plotting red as we began to close below the 34 period EMA. The sentiment got bearish. The momentum got bearish. We broke down through that chart pattern's uptrend line support, that triangle uptrend line support. We've been trickling down ever since. Okay? Now notice as the initial trend here has started to increase. Why? Because we went from what was then, you remember, there was 0 initial trend bars. The wave was flat. Now it's happening. The wave is actually starting to take more of a 4 to 6 o'clock angle. The initial trend is increasing to reflect more volatility, maybe even the early stages of what could become a downtrend, but we're not quite really there yet on the initial trend. The 34 EMA waves trying to get on that, take on that 4 to 6 o'clock angle, but it's kind of shallow. But we're in transition here. We've gone from neutral to definitely more of a bearish sentiment. So that was the triangle breakdown. Now, if I want to take another step, what would be a way to manage this trade? Obviously, I've got psychological levels. I could put in Fibonacci levels in here to project downside support through a Fibonacci retracement or an extension. I can also use my price range movement. Okay, that's another thing I could utilize here. The price range movement overlaid on the chart. Okay, so that's the way I could put some of these tools, which are automated, together. Now realize another thing, I do separate my emerging patterns and my completed patterns. That's why I have 2 different plugins running on those charts, because I could look at the 30-minute chart of the Euro US dollar here, exact same time frame, exact same pair. Let me tile these vertically here. And what you'll notice is I've got 2 different sets of patterns. And the reason for that being that these are emerging patterns, patterns that for the most part have not yet broken, versus completed patterns, those patterns that have been already broken. Okay? So I like to keep them both up in this view, so I know the difference between patterns that I can be a little bit more proactive about, meaning the emerging, and patterns that are going to give me a little bit more insight into what's already been broken and potentially where prices could travel up to or down to in terms of that forecast area, and that would be through the complete. Okay? Now, I know that the Euro US dollar is taking on a little bit more of a downtrend. That's where the momentum's heading. So, if I want to look for a pattern that may not yet have broken out of a pattern, or broken down, broken higher, let's take a look at the dollar yen here. Okay, let's go to the directional bias, daily chart. What's happening on the dollar yen? Well, we did break 80. We're struggling to find any kind of selling momentum to really push us through down through 79, but certainly more bearish. You can see here that most recently we had a bear flag, upward angling flag, break down through support. Really great example of a near-term pattern that signaled that move lower as we slice through 80, the decade level. Okay, and we definitely have slightly more bearish, well, not slightly, we definitely have bearish sentiment and momentum, and a slightly more angled, down-angled 34 EMA wave, which could be indicating sometime soon that we're going to really transition into a downtrend. We'll see. 79 is really what's going to hold up this, and we'll see if the sellers can continue the momentum through that level. But up until now, we've continued to congest. So is this my best time frame for a trade? Likely not. So I can go look for some patterns that are emerging intraday. And if you take a look at the 30-minute chart, you'll see that we've been flattening out, moving sideways on this time frame. Okay, the wave's trying to flatten out. We're looking at a steady stream of blue to green to red to blue, so we're definitely kind of indecisive about where prices are moving next. Notice the difference between this chart and the Euro US dollar 30-minute chart where we had a steady stream of blue, really showing that neutral coil spring. We're dealing with a little bit more volatility here because we can't go steady neutral on this time frame quite yet. See that? Just the grab candles are indicating that. But I think we're flatter. We definitely have a lower volatility, not as low as that 30-minute Euro US dollar, but it's definitely lower. I can see that in the price range. I can see that in the more or less flat wave, and I can see that in what is, and let me move this window here so you can see it a little bit better. I can see that in the very low initial trend reading. Okay. Now, is there a time frame where I might see even a flatter 34 EMA wave? Well, I'm not quite seeing it on the 15-minute chart. Okay, I've got the same kind of issue there. Steady stream of blue, red, green, so a little bit more volatility, not quite as flat. And the initial trend is definitely higher. 5 bar actually reflects more of a distribution market. In other words, volatility, exhaustion is expected. How about the 60-minute chart? Okay, the 60 is actually flattening out a little bit better. Notice how I still have the red, green, and blue, but there's more blue dominating the consolidation, congestion, this sideways market. Is it consolidation or is it congestion? What will be the determining factor? How much blue I see, how much blue in terms of the grab candles. And by the way, for those of you that like traditional candlesticks, you can still get the best of traditional candlesticks here. I differentiate up and down closes by using light and dark shades of the blue, red, and green. So you can still get that classic candlestick interpretation on top of the momentum and the sentiment indicator. All right. So in terms of the blue here, we're definitely flattening out. The wave's flat. I've got more blue. Okay, more so than that 30 or 50-minute chart. And how do we determine this, by the way, gang? It's all a comparative process, isn't it? Don't look for the textbook example. It's all comparison. That's why I call this triage. Okay, we're sorting through, we're prioritizing, we're looking for the differences between the different time frames. And notice also the initial trend. Okay, I believe this initial trend is probably fairly reflective still of this downtrend. The reason I say that is you can see how this downtrend in terms of the recent price movement was a significant one. I think it's still somewhat reflective of that, okay? But I can definitely see we flattened out, and that's where the blue grab candles help confirm what I'm seeing a little bit more objectively. Okay, so triangle pattern recognized by the auto chart. So what am I going to wait for? Breakout or breakdown. How am I going to confirm the price movement? You can utilize a traditional MACD based upon the signal line using a histogram, and if you have the traditional MACD, you can use that. If not, the moving average of the oscillator will give you that as well. And here it is, slightly above the zero line indicating a little bit more bullishness. Okay, so if we break up higher, that is the direction I will take a momentum trade. All right. Okay, so in terms of the view that I'm looking at here, the kind of candles that I'm focusing in on. So you can see through a number of indicators, a number of views, I can get a good idea of what the overall market's up to in terms of directional bias, and then go kind of focus in intraday and get a better idea of where my opportunities are, where my trade management is, and again, scan the charts with that in mind. So the euro US dollar has already broken out of that consolidation, so I can wait to see if that dollar yen 60 minute in this case will do the same. And then once I do that, once it does break out, of course, remember, triangles are self-limiting patterns. They will eventually simply break for lack of anywhere else to go. What can I then do? I can head over to the 1 hour chart and take a look at the expected price movement ranges overlaid right on top of my MT4, and boom, I can get an idea of where there could be projected, forecasted support and resistance over the next 15, 30, 60 minutes. Okay? Very handy to have automated right on your screen. And I can do that after the breakout. Actually, I can look at it now and perhaps even confirm my breakout by using some of these projections. All right, so that is our session for this morning. Thank you as always. I hope you can kind of see the progression of a trade setup using these particular tools, going across multiple time frames and selecting the time frame that I think is offering the best psychological clarity of the market, as well as potentially the best trading setup. I'm Raghee Horner. Thank you as always for joining me, and I'll see you in our next session.